Okay, let's unpack this. We're diving deep into the consolidated financial statements of ECLZ, that's Eczacıbaşı Sanayi ve Finansal Yatırımlar, for the first 9 months of 2025.
Yeah, and our goal here is really to cut through the noise for you, the individual investor. We want to see what's really driving their performance.
Right, separating the sort of day-to-day operational success or lack thereof from these big strategic gains we're seeing.
Exactly. So first off, who are we talking about? ECLC is based in Istanbul, a holding company.
And they operate in two main areas, right? Health and real estate.
That's it. Health is mainly Gencenta and Eczacıbaşı Las Pazarlama. Real estate development, think Canyon, that big complex, and the upcoming Ayazos project.
Okay. And ownership, still tightly held.
Pretty much. Eczacıbaşı Holding has the reins, 50.62%. The public float is around 18.76%.
And they're a decent-sized employer.
Yeah, grown slightly, actually. Just under 1,100 people now, 1,096 to be precise. Leadership seems stable, 6 board members.
And there's female representation on the board?
Yes, 1 member, İpek Güles, so that's about 16.7%.
Okay. And executive pay? Any big changes there?
A slight increase came in at just under 113 million Turkish lira for the 9 months.
Got it. Now, how are they doing in their sectors? Health first.
Well, in health, the Alas Pazarlama arm holds about 1.26% market share in TL terms. That puts them around 25th in the Turkish market. So, a player, but not dominant.
And real estate. Canyon.
That's looking much stronger. The shopping center, the AVM, is at 98% occupancy, super high. Offices are also doing well, 89%.
Okay, so that sets the stage. Now, the financials. This is where it gets, well, really interesting, isn't it? A bit of a paradox.
Definitely a paradox. If you just look at the core operational performance, how the actual business is running day to day compared to last year, it's challenging.
I'll challenge you. Let's talk revenue.
Revenue dropped quite a bit, from 8.4 billion TL in the first 9 months of 2024 down to 6.9 billion TL this year.
Wow. Okay, that's a noticeable drop. 1.5 billion TL less coming in the door. But the key operational figure.
That's the core operating profit, the İsas Faaliyet Kari. And this is, well, it's stark.
How stark?
It plummeted from 1.2 billion TL last year down to just 366 million TL this period.
Oof, less than a third of what it was. So selling less and making much less profit on what they're selling in their core business.
Precisely. Suggests real pressure on their main activities, manufacturing, sales, margins.
Okay, hold on, though. Because if you scroll down to the bottom line, net profit, the story flips completely, doesn't it?
It absolutely does. That's the aha moment. Net period profit more than doubled. Went from 1.2 billion TL up to 2.5 billion TL.
How does that happen? Going from a struggling core operation to a booming net profit?
It's all about non-operational items, specifically income from investment activities. That line item shows a massive 3.8 billion TL.
3.8 billion. Okay, where did that come from?
It's overwhelmingly from gains on selling things off, disposals of assets and affiliates, over 3 billion TL just in this period.
Ah, so they sold parts of the business or assets and booked a huge profit on those sales. It wasn't profit from selling more medicine or leasing more space.
Exactly right. It's smart strategic moves, asset optimization, not core operational growth driving that net profit figure.
Which you can actually see reflected positively elsewhere, right? Like on their balance sheet health.
Absolutely. Selling those assets brought in cash and cleaned things up. Their liquidity looks much better. The current ratio jumped from 2.02 to 2.35.
That's a healthy improvement. And liabilities.
Down. Total liabilities decreased from 14.1 billion to 13.2 billion TL. Financial debt is also down. Overall, it's a much stronger balance sheet now. Their liabilities to assets ratio is only 0.19. Very solid.
So they use the cash from selling assets to basically de-risk the company.
That's a good way to put it. And they're not just sitting on the cash either. They're redeploying it strategically.
We saw they sold off some specific assets in health.
Yes. 2 plants described as underperforming Yenibazna Onkolitik and the Şekerpınar raw material plant. They shed those.
And invested heavily elsewhere.
Precisely. A big commitment, 32 million euros, for a new high-speed vial filling line, Vial 4, at their Gencenta facility.
What's the goal there?
Big capacity increase. They're targeting a 60% jump in sterile liquid production capacity. That signals a clear shift towards, higher value finished products.
Makes sense.
Okay.
And the real estate side? Any movement there?
The Ayazana Urban Transformation Project is moving ahead. The land registration was completed back in March 2025, so that sets the stage for the development where they have a 47% revenue sharing deal.
Okay. And with all this cash flowing from asset sales, did they reward shareholders?
Oh, definitely. A major point. They paid out a 1.2 billion TL nominal dividend based on 2024's profits.
That sounds substantial.
It represents a 175% gross distribution rate.
Mm.
Very generous. Shows management's confidence, likely fueled by those asset sale proceeds.
Okay, so let's try and summarize this for you, the listener. ECILC is in the middle of a major strategic shift.
Yeah, they're selling off less productive parts, which massively boosted their net profit and strengthened the balance sheet.
But their core day-to-day business operations face some real headwinds in this period.
Right, and they're taking the cash from those sales and investing heavily in potentially higher growth areas, high-tech pharma production with Vial 4, and the big Ayaza real estate project.
So the net profit looks fantastic, but you need to remember it's driven by those one-time strategic sales, not by the current operational engine.
And that leads to the critical question for you as a long-term investor looking at this. It's really about the future.
Which is?
Will the capital they gain from selling off those assets be enough to successfully launch and ramp up these big new projects, Vial 4, Ayaza? And crucially, will those projects generate strong, sustainable cash flow from core operations down the line to replace the current weaker operational results?
That really is the key takeaway. It's a bet on future execution.
It is.
Well, this deep dive helped you understand the nuances behind ECLC's performance and their big strategic pivot. Maybe give us a like.
Yeah, and subscribe for more analyses like this. Sharing it with other investors who might find it useful would be great too.